Over 75% of Canada's total merchandise exports currently flow to a single destination, the United States. This stark figure highlights deep economic integration and a profound vulnerability. In response, Canada has charted a new, ambitious course for its future. The government has announced a bold national objective to double exports to countries other than the United States by 2035. This is not merely a statistical target, it's a fundamental strategic pivot to secure long-term economic prosperity in a shifting global landscape. The 2035 deadline provides a runway for a complex, multi-decade transformation of Canada's commercial DNA. The timing is critical. The certainties of the post-Cold War global order are fading. The rise of protectionist sentiments, geopolitical tensions, and supply chain disruptions underscore the risks of over-reliance on any single partner, even the U.S. The world's economic center of gravity is moving. Rapidly growing middle classes in Asia, Latin America, and Africa are creating vast new markets. These markets want what Canada produces: high-quality food, critical minerals, clean technology, and advanced manufactured products. This initiative is proactive, seizing opportunities rather than reacting. It's also driven by domestic pressures. Growth in Canada has been uneven for years, with some regions and sectors lagging. Diversifying export markets can connect producers in the prairies, Atlantic Canada, and the North with customers in Europe and the Indo-Pacific, fostering inclusive prosperity and higher-paying jobs, reducing regional disparities. Achieving such an ambitious goal requires more than just a declaration of intent. It demands a comprehensive, multi-pronged strategy. The first and most visible pillar is an aggressive pursuit of new trade agreements and the full implementation of existing ones. Canada has already secured landmark deals like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership and the Canada-European Union Comprehensive Economic and Trade Agreement. The next phase involves deepening these ties, resolving non-tariff barriers, and initiating negotiations with new, high-potential partners, particularly in the fast-growing Indo-Pacific and in South America. These agreements are the legal and logistical superhighways that will make expanded trade possible. A second crucial element is providing direct support to Canadian businesses, especially SMEs that form the backbone of the economy. Many firms have the potential to export, but lack the knowledge, resources, or connections to navigate complex international markets. To bridge this gap, the government is expanding programs that offer export financing, loan guarantees, and risk insurance through agencies like Export Development Canada. It is increasing the frequency and scope of trade missions, where entrepreneurs can meet potential buyers, distributors, and partners in target countries, turning opportunities into sales contracts. Third, the strategy emphasizes moving up the value chain. While commodities remain vital, the real prize lies in processing them at home. Investments in research, innovation, and manufacturing capacity transform raw inputs into higher-value goods. The successful execution of this export diversification strategy promises to send powerful, positive ripples throughout the Canadian economy. The most direct impact would be a significant boost to GDP. New export revenues will raise national income. Firms in international trade are more productive, more innovative, more resilient. Encouraging more companies to export lifts overall productivity. This is crucial for long-term growth and a high standard of living. Beyond GDP, the plan could create many new, high-quality jobs. Export-oriented industries tend to pay higher wages because they compete globally and need specialized skills. Energy finds new markets for LNG and clean hydrogen. Farmers secure contracts to sell more canola and pulses. They will need to hire more engineers, technicians, agronomists, and logistics specialists. Job growth won't be limited to big cities. Rural and remote communities can benefit, reversing decline in some areas. Regions have unique strengths: Atlantic proximity to Europe, seafood and agri-food, ocean tech, prairies as a global breadbasket, British Columbia's Pacific Gateway, forestry, critical minerals, digital media. Sectoral impacts will be transformative. Energy diversification opens markets in Asia and Europe. Cleaner fuels like LNG help others move away from coal. Agriculture gains less reliance on a saturated U.S. market and better prices for premium products. Manufacturing shifts toward high-tech niches, aerospace components, medical devices, EV parts. Companies invest more in technology and workforce skills, making Canada's industrial base more sophisticated and globally competitive. While the primary goal is to grow trade beyond the United States, the strategy will inevitably reshape Canada's most critical bilateral relationship. The US will remain Canada's largest and most important economic partner. The sheer volume of cross-border trade, deep supply chain integration in sectors like automotive and defense, and geographic proximity ensure this reality. The intent is not to replace the US market but to supplement it, creating a more balanced portfolio of trade relationships, requiring careful, continuous diplomatic management. A more globally connected and resilient Canada is a stronger partner. Less susceptibility to shocks makes for a more stable neighbor and can slightly strengthen Canada's negotiating position toward a more equal partnership. It allows Canada to advocate for a rules-based order from greater independence and build a mature partnership with the US based on shared values. However, potential friction exists. Certain US industries or political factions might view Canada's pursuit of other markets as a competitive threat or a weakening of the North American bloc. If Canada builds supply chains with Indo-Pacific partners in critical minerals or clean energy, it could be seen as diverging from Washington's friend-shoring narrative, so communications will be key. Diplomats must emphasize adding markets, not subtracting from the US partnership. As Canada grows capacity in clean tech, critical minerals, and advanced goods, it can be an even more valuable supplier. Both nations share interest in secure North American supply chains for EVs and semiconductors, framing diversification as strengthening continental competitiveness. The path to doubling non-US exports by 2035 is fraught with significant challenges and risks that cannot be overlooked. The first hurdle is the global economy. Canada's success depends on sustained foreign demand. A global recession, a financial crisis in China or the EU, or a widespread slowdown could dampen appetite for Canadian goods. Geopolitical instability, new conflicts or escalations, can disrupt trade routes and close markets unexpectedly. A second constraint is domestic capacity. Trade deals don't create products. Many industries may struggle to scale, lack capital, skilled labor, or logistical expertise. Infrastructure bottlenecks across ports, railways, and highways could limit capacity without massive investment. Competition is formidable. Every nation is vying for market share. Canada must outcompete top peers across agriculture and advanced manufacturing. Winning requires superior quality, innovative technology, competitive pricing, and exceptional service, demanding sharper business acumen and international marketing savvy. Political and regulatory hurdles persist. Domestically, environmental regulations, resource development challenges, and interprovincial barriers. Internationally, complex standards, arbitrary customs, protectionist rules. Overcoming these requires persistent diplomacy, local market insight, and time-intensive execution. To transform this vision into reality, both government and the private sector must take concrete, coordinated actions. Governments must double down on trade diplomacy, not just new deals, but helping firms use existing ones. Deploy more trade commissioners on the ground in Vietnam, India, and Germany to provide market intelligence, identify buyers, and navigate bureaucracy. Streamline approvals, invest strategically in infrastructure and innovation, expand port capacity on both coasts, upgrade rail, and build out digital networks that underpin modern commerce. Use financial instruments to de-risk investment, targeted tax credits, grants and co-investment funds, supporting food processing plants, mineral refineries, and clean tech manufacturing. Businesses must adopt a global mindset, research opportunities in CETA and CPTPP markets, adapt products, packaging, and marketing strategies, develop EU-specific formulations and campaigns that resonate in Japan, invest in language and cross-cultural skills, form export consortia to share costs and risks, hire dedicated export managers and participate in major trade shows, ship in larger, cost-effective volumes, let industry associations act as intermediaries, organize sector missions, provide export compliance training, and lobby to address trade barriers. Success depends on this ecosystem-wide effort. Canada's goal to double its non-US exports by 2035 is more than a lofty aspiration. It is a calculated and necessary response to 21st century realities. The stark statistic, over 3/4 to a single market, demands a strategic pivot. This is a proactive effort to de-risk the economy, unlock new growth, and spread prosperity across regions. Built on trade agreements, exporter support, infrastructure, and value-added production, the plan offers a clear roadmap. The rewards: stronger GDP, higher-paying jobs, and broader innovation, connecting agriculture, resource-rich areas, and manufacturing to the world's fastest-growing markets. This shift recalibrates the U.S. relationship toward balanced partnership, not turning away from a friend, but building a wider circle of friends for stability. Obstacles remain: fluctuating demand, fierce competition, capacity constraints, and political hurdles. Success requires political will, smart public investment, and a mindset shift among businesses. Government must enable, firms must be bold, innovative, and globally engaged. The data point that started this journey, 75% reliance, must be the benchmark. By driving that number down, Canada secures a more prosperous future. The race has begun.